Here we go. Good morning, good morning, good morning. Welcome, welcome, welcome. Happy Monday to you. Can you believe it's Monday already? How in the world did that happen? Well, probably because Sunday was right before it. But today we have a very special episode. Of course, we're going to be taking a look at some of the articles and what's going on around the world of money and finance. And we're going to be taking a look at some of the funny stuff, some of the not so funny stuff. Again, I think everything is very serious, but I think people are doing their best with what they can do and to protect themselves and their wealth. And we're going to be taking a look into that stuff. Of course, we're going to take a look into the crypto market. The brief update from the traditional stocks here, let me just give it to you. Gold is down, and it has been going down quite a bit actually over the course of entire November. Silver is accordingly going down. However, both have performed really well. We do have some charts that I'm going to share with you to see kind of how different asset classes are performing and where they have been. So that's one thing. The second one you want to know is, well, Dow is below 30,000 right now. It actually has had not so exciting Thanksgiving, and there are projections that it's going to be a down day for the traditional markets. Now, we're going to be taking a look at the non-traditional markets or the crypto markets because I find them to be much more exciting. And again, I do believe that they are the future, which is why I'm focusing on them today. Why look into the history when we can look into the future? We're also going to be taking a look into what's happening with CBDCs because this particular show is all about how the governments and central banks will finally unleash this massive inflation coming our way, and it does have to do with digital currencies. So we're going to be taking a look into that stuff and kind of some of the studies that have been already performed to showcase of what is actually possible. I'm super excited that you're here. If you're brand new to the channel, do me a huge favor, smash the subscribe button. If there's some sort of button that allows you to subscribe, which there should be, just look around, look around. If there is a like button and you enjoy the show, smash that right about now as well. If there's notification, hey, that too might be a good idea so you get notified every time we go live, which is, well, just about every single day. All right, y'all, let's do this. All right, and good morning. Happy Monday to you. Let's go in and take a look at what in the world is going on around the world of money. So we're going to be taking a look at the traditional stuff. We're also going to take a look at the crypto stuff because they're all interconnected in my humble opinion. Now, one of the things that you likely know is that there are mass closures all over the world. United States, Europe, I mean, everybody everywhere is starting to shut down. And here where I am in Rhode Island, well, we just started a 2-week pause. They don't call it shutdown anymore. Now they call it a pause, a tea party maybe. All right, now that I'm done being silly, New York City pub is declaring itself autonomous zone after government tries to shut it down, and basically they have spray painted autonomous zone right in front of it, put on giant signs that says autonomous zone, and they're basically saying, you know what, we no longer recognize your laws. They apparently took their liquor license to be able to sell, although the license still hangs in the pub. So now the pub is actually offering booze for free. And the cool piece is that the community is responding really well. So not only are they going into the pub and getting free booze, but they're also leaving handsome tips, way more than what the booze would actually cost. So that's one of the things that I thought was really, really cool. Now, next piece is the piece that I really wanted to cover, and that goes into the meat of the title of the whole thing of how will the central banks actually unleash the inflation. And there's a case study that we're going to be taking a look at. So back in 2009, the Fed first launched the QE. Just about everybody, all the traders, all the economists, everybody was like, this is crazy. This is going to unleash the massive Weimar Republic type of inflation. I mean, the money is going to become worthless, although it has lost a lot of worth, let's be honest. But none of that stuff actually happened, right? What did happen? Well, the asset prices went up while the wages remained flat. And here in this particular chart, you can actually see that, although it's kind of hard to be able to see it. So what I have done is I have actually taken the chart and I have also converted it sideways so you can actually read what it says without a confusion. So see, a bit of training in programming is finally paying off. So as you can see, where did the money actually go? What inflated? Well, you will see that all of the asset prices went up. S&P 500, the European stocks and bonds, the U.S. stocks and bonds, the MSCI around the world. I mean, just about everything you can think of. Gold went up, bonds went up, everything went. What didn't go is, well, the nominal GDP around the world didn't necessarily move. I mean, it did, but not as much. Okay, it moved more than Japanese bond, but Japan was struggling to begin with already. House prices kind of stayed together with the nominal GDP. The wages actually went really down, and U.S. and European wages moved in unison. As you can see, the U.S. CPI has actually stayed in the unison with the wages, more or less. The EA housing prices went down, European CPI went down, and then commodity just went basically negative. So now that I have actually made this super tiny, I can't see it. So let's move it up so that I can actually see the letters. So what also happened is now a decade later, right, all of the stuff has ballooned within the asset prices. The 10-year bond or treasury continues to trade well below 1%, and it will continue to do that for a while longer. But the market is convinced that nothing that Fed will do will ever create this tsunami of inflation. Because right now, I think everybody knows we are in deflationary process. We're fighting deflation as we speak, and the governments need inflation. Now, deflation by itself is not bad per se. The problem is that the way that the financial system is built and created demands inflation to happen, because all of the money that we call money is basically debt that is being created into the world. And how do you eliminate the debt? Well, you got to inflate, right? And so inflation eats the debt, but it also eats the money, which is debt, right? So I know it's kind of like really berserk to think about it, but that's just kind of how it works. So like it twists your brain a little bit and it makes it potentially hurt. So let's take a look at what they're saying. But now the question coming in with a new sort of, rollout of, billions of dollars per month. And there are some conversations right now that the Congress, I guess, is looking at some sort of new stimulus bill. Nope, don't celebrate too soon. It looks like the $1,200 that you thought might be coming your way is not coming your way. But they're looking at a smaller bill to kind of tie us over until January, and then they have this giant bill of about $2 trillion that they want to roll out in January, February, and then following one of about $1 trillion for student loan debt and that kind of stuff, and who knows what else might come out of it. So trillions of dollars are also coming in. That truck of fiat money is backing up. I can hear it beeping as we speak. The market is basically, so the question now comes in of, could the central bank succeed in sparking these runaway inflations? And the answer is yes. They have been failing, and every time they fail, they push more and more and more. But the problem actually does not sit with the the problem actually sits, not doesn't sit. It actually sits with the current way that the money and the monetary and fiscal policies are created. That when the governments, when the Fed, when the central bankers actually create this money, print this money, which they're not really printing, it doesn't actually go to anybody. It's simply goes in and kind of sits on the books and sits as a reserve to the bank to kind of protect the bank. And because of the fractional lending, then bank has this sort of like a reserve right there, and now they can lend. The problem is banks are not lending, and they're not lending nearly as much as they should. So this trickle down economics is not really working. What is happening is the trickle up poverty level. That is what is actually currently happening. But now enter the biggest news of the year ever. This is the largest economic and financial story of centuries, not a year, not decades, of centuries. But of course, it is being successfully drowned by the conversations about COVID and the presidential elections and the Black Friday and Cyber Monday sales and all of that stuff, right? Now, the BOA, Bank of America Chief Economist Officer Michael Hartnett, who believes that the key theme to the next decade will be dollar debasement and digital currencies, and I agree. It is the form of digital currencies that the central banks, which is known as CBDC, will use and roll out that will finally kick off and spark this inflation that everybody, not this inflation, but this inflation that everybody is expecting, or at least was back in 2009 when we started seeing first rounds of these drops and stuff. Quote, 2020 saw 21 trillion of global fiscal and monetary stimulus. That's a lot of money, y'all. The US federal deficit skyrocketed to 25% of GDP. Global debt is expected to hit $277 trillion, or 365% of the global GDP by the end of the year. This is insane. This is absolutely insane. And the global interest rates are the lowest level in 5,000 years. Now, if the interesting thing, since we're talking about 5,000 years, that might be of interest to you, maybe, maybe not, I don't know, is that the whole conversation about the debt and all of that stuff, there is a fabulous book that truly proves once and for all, and unfortunately the author actually has passed earlier this year, that we have been operating on the debt economy for 5,000 years or more. And of course, now we also know that, well, the interest rates are lowest ever. In the coming decade, a loss of central bank independence, we are having shift towards digital currencies for policies such as the universal basic income, helicopter drops of money, student debt forgiveness, the sparking off more consumerism, which we're going to see in a moment, the introduction of the yield curve control, the modern monetary theory, financial engineering, public sector deficit, all of those things together will make it really tough for the US and the rest of the world as well to finance the account surpluses and deficits in the upcoming years. And of course, for that reason, the dollar will likely have to start declining, and it needs to be bullish for the commodities and emerging markets. Now, of course, this there's a particular chart that is showing how actually the gold price has really risen since the 1920s, and you can see some of these very parabolic moves that are happening here. Now, of course, the gold has, as I mentioned at the introduction, come down over the last month quite a bit, and folks are I think it's a multiple reasons. Part of it is that, well, obviously there's more sellers than buyers, right? So that's number one reason why the price is going down. The vaccine and potential, like, things are going back to normal, everything is fine, which is not really the case whatsoever. And then, of course, we do have reports that many individuals are basically starting to dump their gold and dump just about everything to get into the cryptocurrencies. Then we have the Bitcoin versus gold chart, and you can see that while the gold has actually gone up quite a bit, that where we are comparing to kind of the gold versus Bitcoin stuff, we are not even, I mean, we are what? Like maybe 50% of the, where we were in the 2017. So still a lot of ways to go. Now, this sounds really great in theory, what the BOA CEO COOCMO. Who is he? He's CIO. IAO. So that, how does that work in practice? And of course, the question comes in of like, how is that working? Well, the any experimentation that we can kind of see, we're noticing that China is actually becoming probably the biggest sort of revolutionary of the new monetary and technological advancements. And they have been. They have been. I mean, if you really think about it, way back when the first paper money thing that we call money currency rolled out, it came out of nowhere else but China. They used to deal with it well before the rest of the world. So they have been innovators in the world for centuries, for thousands of years, and they are yet again right there doing that stuff. So the answer of how this would actually all work comes from China. We'll take a look at some of these charts in a moment, I promise. Now, what happened in October, China launched one of the biggest real world trials of their CBDC in Shenzhen. And we covered that here on the channel. And if you want to watch the whole thing, of course, you can go to the YouTube channel, look at the Money Matters show, look at the cryptocurrencies component, and you'll be able to find it right there. We consider kind of everything that has happened. They also since then have rolled out a second trial in another town. This is actually happening probably as we speak right now, and we covered that too on the channel as well, and you can find it. Now, the idea was not to test the technology. They already tested technology and they know that it works. What the idea was to boost consumer spending in the wake of everything else that's happening, and also give them a comfort level and see how people behave when the government decides to give money. So what did they give, in case you're like, I really don't want to go back and watch or listen to anything else that you have said, so summarize it for me. So here it is, a 30-second summary. They said, we'll gift you 30 bucks, basically, $30 worth of yuan. If you sign up for the whole thing, it's going to be a lottery. Once you get it, go and shop on us. And 2 million people actually signed up for it. 50,000 people actually got it. And they went shopping and they went buying anything and everything from shoes to food to whatever you want to, think about it. And including Walmart, by the way. I don't know if you knew that, but Walmart does accept crypto, just not in the United States. You have to go to China to actually do it. So that's actually what happened. Now, the central banks around the world are all now rushing to roll out the idea of issuing digital currencies. And the Bank of International Settlement and 7 central banks published a framework for how the CBDCs should be issued. And what China actually saw is that everybody who got their money went out and shopped. And they shopped until they dropped or ran out of money, whichever one came first. But it proved that you can actually easily roll out cash. And of course, if anybody offered you like $100 or $1,000 and stuff, what are you going to say? No, thanks, I'm not interested. Of course not. You're going to take it. You're going to download whatever the heck they tell you to download, and you're going to participate in the whole thing. Why wouldn't you? It's free money. Well, so to speak, right? So, but that's what ended up happening. And of course, they were trying to push the consumerism and push the price sort of increase, meaning pushing the inflation. Because we do know, one thing that we do know about inflation is that you get it when money starts circulating, when it's moving. Right now, it's not moving. It's known in the world of finance, it's known as dead money. We have trillions of dead money sitting there not moving. If and when it starts moving, that's when you can actually start moving that inflationary piece. And that is the part that current system is not allowing to individuals, to the banks to roll out. And that's why we're not having this inflation thing happening. The propensity to spend the digital currency is virtually instant and without limitation. After all, it's money that the central bank, in this case, the Bank of China, created out of thin air. All of the money is created out of thin air. I know everybody kind of argues, and I'm gonna go here. The whole Bitcoin, Ethereum, the whole 9 yards. Everybody's like, "Oh, but they're creating it out of thin air." Well, how do you think the rest of the money is created? It is created out of thin air. Money is created out of thin air, and it is our belief, collective belief, that we can exchange something for something else. At some point it has value, and at that point it can become money or currency or however you want to roll it out of what it is. But all of the value is derived from a collective belief, and of course in the case of the United States, potentially the men with guns, as somebody has said once. Now they create it out of thin air, right? And of course now it can be used as a form of massive universal basic income or unprecedented population subsidy in hopes to spark the higher prices and of course the circulation of the currency. Consider it a way for central banks to atone for the fact that their policies up until the point and still right now were unable to boost wages in the past decade and decades. They will now simply hand out money with little regard for the consequences. And of course, their goal is to basically inflate this 365% of GDP into the thin air because they can't afford to pay it. The interest rates cannot go up because if they do, the financial world won't collapse. So, the earth will stay intact until something like comes our way or we get sunk into the black hole. But that's not coming, for a little while. Give it a 1,000 years plus minus. So we should be safe for in this lifetime right now. Final timing is the ISSO 20,000 2022. No, 20,022. I said one too many 22s. 20022. How's that? How's that for the thing? What is the timing? When are these puppies rolling out? Well, the ISSO 20022 that I couldn't pronounce earlier for some reason, the required universal transaction standard, which will make payment in digital currencies possible. We're looking at a 2022 launch date. And now we're going to take a look at, we can get rid of this guy. We're going to take a look at some of these things that we just talked about, the charts and stuff that you couldn't really see. So what this basically is, let me see if we could take this. Ooh, I gotta zoom this one in because this is super tiny. Now this is what you're looking at over here is the timeline of, well, now I went too far. Okay. Seriously, Nev. Can we see this? Oh my gosh. Well, this is silly. This is just silly. Okay. But basically, you can take a look into it. It is on Zero Hedge, and it's the timer for their Bank of China digital currencies. And as you can see, they started the research group in 2014, and they started the goals and the determination to issue stuff in 2016. Then they actually did the research group, started to cooperate with Shanghai Commercial Paper stuff in 2017. So they started this quite some time ago. Only now in 2020 that they have actually registered 65 patents of digital currency issuance, circulation, and recycle. Of course, that happened earlier this year. Then they started actually rolling things out. And of course, they started the week-long trials now in October and November. And we can actually expect that this is going to, of course, continue on. And, trials won't be trials for very much longer. Now this, what you're looking at is the migration of euros, US dollar, and sterling regions to ISO 20,000 20. Let's try this again. I struggle with this number for some reason. 20,022. That's it. Then done. So you can see that right now, SWIFT, which is the global sort of transaction monetary thing that we currently have, is going live in November of 21. So a year from now, they're going to go live, and then they're going to actually coexist and phase out SWIFT out of it and start introducing some of the digital stuff. As you can see, they already have a plan. Europe is actually going to plan to go live also in November 21 with the EBA clearing, right? And then the UK plans to go live in 22, and then the Fedwire and the clearinghouse United States. Well, US is not wanting to play along with this stuff, and they're doing some of the other stuff. They're going to, look at the specifications and see how they can do some legacy changes and that kind of stuff, but they don't plan, as you can see, to go live or roll out anything anytime soon. And of course, I have my own sort of beliefs and reasons of why I think that that is happening, and I have shared that with you previously on this channel, and it has a lot to do with, they're looking for financialization of the dollar through the digital means, through the stable coins, and I think that they will just adopt one of them as opposed to creating something of their own. So while all the other countries are going out there and developing stuff, I think if U.S. is intelligent enough, but then again, Janet Yellen is coming as a treasury, so we'll see how that's going to play out. But it will be interesting to kind of see what happened and kind of what transpired with the whole thing. Now, I do want to go into this particular article as we covered. I want to say yesterday, I think it was yesterday, with Nouriel Rubini taking to Twitter and going bananas, or maybe it was 2 days ago, and going bananas and were like, "See, I told you, the Bitcoin's crashing." Oh yeah, it was a couple of days ago on Thursday, right? And he did it on Friday because we did crash. Well, crashed. We went down in Bitcoin, so it's normal, and it was a healthy thing for it to happen. So it's not meant to. It's not a straight line up. It's never meant to be. And when it is, it's time to get the heck out of Dodge, in my humble opinion. So he was basically saying like, "Oh, it's going to go down, and I told you this is a scam, and you're being scammed out, and people are duping on you, and blah 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 blah," right? And but he also did the same thing back in 2018 when the price went down, and he said basically, quote, "Bitcoin has lost almost 80% of its value from $20,000 to close to $6,000. Another 90% down, eventually still to come." And it did go down to about 3,500 or so, and saying you will get into the zero and you're going to get wiped out and stuff. And, of course, it's still a bit more to zero to go, and it hasn't. So what the article did is actually showed, of course, on the heels of that, many other companies are still investing and getting into the cryptocurrency. And right over here, we actually have a chart. This is the chart that I wanted to show you of where the returns really are. And as you can see, it actually measures on the change on the vertical of November 6th through November 24th, right? And on the horizontal change from March to November 6th, right? So it kind of showcases where the moves have happened over the course from when we had this sort of hit the global wide shutdown all over the place, and what the returns are. And one thing that you will notice is right here on the 000 line, right, and into the negative component, the dollar index actually has gone negative from March to November, and it hasn't moved much of anywhere in the month of November. So it kind of stayed mostly static, and so that's where we are. Then you have the U.S. Treasury bonds that are basically just barely moved into the positive zone, right? Then, of course, you see where the stocks and the different indices are. And you can see right over here, NASDAQ from March to November actually is what, like 70 some percent, right? That has increased, right? The return. S&P 500, we are seeing it's about 55% level or so. Dow Jones, where's Dow Jones? I don't see it. I don't see it at all. So I can't even show it to you because I just don't see it. Gold actually has performed to about 30% since March, but it has gone down negative, what is this, like 6-7% since November 6th to November 24th. Silver actually has returned well over 100% since March, but it has come down also another like 8-9% or so since the November. And then you have Bitcoin, which is off the charts completely, having returned 22% over the course of the November 6th through November 24th, and 160% from March 20th to November 6th. As you can see, here is the chart of everything, and then Bitcoin is basically that away, right? So you can't even see it. This is the reason why so many individuals are actually jumping into the whole thing. And the interesting piece that I think is also worthwhile to mention is the MicroStrategy purchase. Now you already know, and I know we've beaten this horse to death. It's not no longer moving, but I think it's important to also realize of how grossly wrong some of the economists are, including Mr. Rubini. That look at what happened and the returns that MicroStrategy has made. So they buy Bitcoin, 250 million worth of it, sometimes in August of 2020, and since then, the Bitcoin actually has come up quite a bit handsomely. And so from August till November, they have received a return of just shy of 120%, which is well over 1,000% on annual basis. So this would be an annual yield. This is an insane return that you can't get anywhere else. This is the reason why more and more people are actually looking at it, realizing the returns that they can make, right? And then they also start studying the technology behind it, realizing how amazing the whole piece is. This brings us now to looking at the market, looking at what's going on in the top 100 currencies by the market capitalization. Of course, I'm going to refresh because it's been a while, and since then, Bitcoin has gone up yet again. So Bitcoin is currently standing at $18,770.33. Lots of sevens and threes. Must be lucky. And hey, 8 is also a lucky number in some cultures. Infinity, right? Anyways, talk about me being a super big geek. You're welcome, I guess. It pumped 4.4% over the 24 hours. Ethereum is at $594.24, going up 8.2% in the 24-hour period. Excuse me. XRP is up 2.5%, currently trading at 62 cents. USDT is USDT. Link is $13.92, up 6% in 24 hours. Bitcoin Cash up 4.1. Litecoin 7.1. ADA 2.1. DOT 8.5. BNB 3.4. As you can see, we can scroll down and we are seeing basically everything is in the green. So very clearly a green market today, with the biggest mover being Aave at 18% in a 24-hour period, and currently trading at $76.54. Second one is Synthetics Networks, SNX, at 15.2%. Wi-Fi, Yield Finance, in the third position at 12.1%. Ampliford 12%, Sushi 11.4%, Uniswap 9.1%. So as you can see, there's some healthy movers. On the dumping end of things, we actually have only two larger things that have gone down. Zen is one of those things. Horizon, right, as a negative 5.7% in 24-hour period, but they also did go up 56.5% in 7 days. So, I don't know. When it pumps high, it's supposed to come back down. Numeraire, NMR, is negative 2.56, but it also pumped 5.6 in the 7 days. So I guess they're right back where they started a week ago. After that, we have basically, 1% and less than 1%. So not overall a really, really good and healthy markets. Now we did talk about sort of this sort of movement of the central banks and central bankers, really how they're going to flood the money and how they're going to flood the world and individuals with digital currencies. And this is going to create a severe inflation potentially, ostensibly, right? That it could happen. The protection from all of that, of course, is going to be potentially, maybe ostensibly, as they say, precious metals, right? They're saying emerging markets, but emerging markets are going to be rolling this out. So I don't know that I'm buying that from the Bank of America CIO. I'm not saying he's wrong. I'm just saying I don't really see it. Where I really see that things are going to massively help us out is going to be in the hard assets. So precious metals will, I think, have some say in that. I believe that cryptocurrencies, the non-bank owned cryptocurrencies, so not CBDCs, but the actual cryptocurrencies, things like Bitcoin, things like Ethereum, things like Aave, and that kind of stuff, uh, they are the ones that are going to be actually going up in value, and Bitcoin specifically being able to preserve individuals' sovereignty. The other one that I also believe is going to be able to help out a great deal is going to be real estate. And the reason for that is that in inflation, it actually eats your debt from it, but you are left with the house. And of course, as things are resetting and as we start shifting, that those homes are not now being sold and rented for, say, dollars, but maybe for Ethereums or for Zilicas or for Bitcoin or forever. That is where the true value now really starts coming in and playing around. And I think a marriage of those two are going to be hugely important, which is why I am working on building that stuff, right? So this is the part where it's going to be really, really good and exciting. But I do want to take you to a couple of places where we are seeing some very interesting moves when it comes to CBDCs, because we are hearing about China, but we're not hearing about other places. So Saudi Arabia is closes in launching digital currency with UAE, United Arab Emirates. So Saudi Central Bank, SAMA, and the UAE's central bank jointly published a report to show the key benefits of central bank digital currency. What happened is that they actually partnered together and they released a report, and they actually went and concluded, after concluding their 1 year joint central bank digital currency pilot that was called Project Aber, or Aber, or however you pronounce it, showed promising results and marked a significant improvement over the centralized payment systems in terms of architectural resilience. And what they wanted to do is to explore the possibilities of settlement of assets like bonds. They also wanted to check possibilities of a single dual issue digital currency as an instrument of domestic and cross-border settlement between the two crunches. They did confirm that the project is technically viable, and they are very bullish, looking to move forward. But they are not the only ones. Right over here, we actually have a map that you can see that just about vast majority of the map, and I was trying to find a different map that I had shared with you in a few episodes a few months back, actually. So I might have to go back and try to see if I can find it, where it was really showing that 90% of the world is actually playing around with it. So this particular map doesn't necessarily show that as much. I mean, they're showing the places where they have rolled some of the stuff out. So you can see Ukraine is, starting to play around with it. China, of course. Thailand is starting to do it. Uruguay is starting to do it. The Ecuador already rolled it out, and they said, we don't really like it. So, but they might come back. But they're, so as you can see, this is very much taking over the world from the Americas all the way into the Africa, into the Australia, into everywhere. The only place I don't think is doing much of anything is the South Pole. But then again, not much happening over there. The penguins say they don't need it. They don't need it. They're good with fishing as long as we stop demolishing the planet, and they can keep their ice and keep their cold waters, and fish keep coming back. They don't need crypto. Russia is set to legally recognize Bitcoin. huge moves in Russia. As you know, Russia actually started to criminalize Bitcoin, but they in 2021 will now actually change the law to change it from criminal to not so criminal, and that is the exciting piece that you should be aware of. The Prime Minister of Russia has revealed the government's plan to amend existing laws to recognize cryptocurrency as property. As such, digital financial assets will be recognized as property, and their owners will be able to count on legal protection in the event of any illegal actions, as well as defend their property rights in court. This is incredibly bullish. And finally, I do have a bit of, well, one analyst list of top 5 crypto projects that are likely to surge in December. And I think I agree actually with all of them. I don't know that I don't agree with any of them whatsoever. So first on the list is Ethereum, likely to balloon in price. I absolutely agree. I think that Ethereum will absolutely go to the moon, and I wouldn't be surprised if the price continues rolling on up as it has, because it's still deeply discounted with every project. Okay, now every project, but a lot of projects being built on top of it. The only place I can see this whole puppy going is on up. XRP is on the number 2 list, and he believes, Davis Lark, believes that a big December as investors await the Spark token airdrop. So they're going to keep on buying it. My fear comes in that once they receive the airdrop, will they dump it? We see this in DeFi happen all the time, where people pile in on something because they're receiving their rewards. The moment that the rewards dry out, they are out and gone. So that's one piece that I would like to add, just to kind of think about it. Aave, I think Aave is incredibly good project. I absolutely agree with him. It has, they have revolutionized a lot of things within the crypto space and the DeFi space. They are soon releasing Aave version 2, V2, which could be a big catalyst for the token. They are doing all kinds of different things, where they are looking of how they're going to improve of gas optimization to reduce the gas fees, which you know that you have to pay to do it. So they are releasing things like debt trading, collateral trading, leveraged lending and borrowing on margin. They are looking into also bringing mortgages into the system, which I am particularly very pumped about, because that's kind of the piece that we're working on alongside there. This is crazy, because the mortgage market alone is worth tens of trillions of dollars globally per year. In United States alone, it is about $105 billion a year, and that's not accounting for all the other stuff that is also attached to it. So, like I said, very, very bullish on the stuff that we're doing, and super excited for things that we're going to be rolling out soon. But yes, I agree. Aave is an excellent project that I think is going to perform really well, not just in December, but long term as well. Axie Infinity, AXS. Davis believes that Lark believes that he has a huge potential, and they are basically creating a game where you can build digital land. So it's similar to some of the other digital land, digital real estate, excuse me, components that we have seen. But he's saying like, hey, this is going to be really big and huge. It's kind of like Pokemon, but on steroids, and he believes that they're going to go up quite a bit. And final pick in the top 5 is Kusama. KSM is the symbol, trading symbol, and he expects this to do really well in the coming months, not just December. And I think he might be right. It launches its own parachain auctions. Parachain is a simple blockchain that attaches to the main chain like Polkadot, or Kusama will be able to access their security and wider network effects. So Kusama will be able to host 100 different blockchains attached to it. So it's kind of like multiple parachains, like spokes on a wheel, and Kusama is the center of the whole thing. So he believes that this is going to change how people interact with Kusama, which is of course going to bring the value of the entire project on up. So there you go. This is it for today. I am incredibly thankful that you're here. Do me a huge favor, smash the like button, smash the subscribe button, smash the notification button, and I will see you tomorrow for, well, we'll see what happens. Until then, stay forever money blessed, and do remember, you are only one